Welcome everyone to the annual meeting of shareholders of our newly named Turners Limited. My name's Grant Baker and I'm the chairman of the company. The notice of the meeting and the 2015 annual report, together with the audited financial statements, have been circulated or made available to shareholders. A quorum is present and the meeting is duly constituted, so therefore I declare the meeting open. Executive Director and CEO Paul Burns and I will be presenting to you today. The 2015 financial year saw the company deliver an outstanding profit result, which was ahead of a very ambitious forecast. While we'll briefly review our investments to date, our presentations will be more forward-looking with a focus on our strategy and the platform for future growth. Following our presentations, we'll move to the resolutions set out in the notice of meeting. You will have the opportunity to ask questions about the resolutions at the time they're proposed, and a further opportunity towards the end of the meeting to ask questions on any other general aspects of the company's operations. The board has received proxies from 378 shareholders, representing approximately 54.4% of the shares on issue. The 7 resolutions will be decided by a poll on return of the voting and proxy forms to shareholders. Our auditor, Staples Rodway, will act as scrutineers. I'd now like to introduce my fellow directors. So firstly, Paul Burns. Paul will address the meeting shortly. Paul's Executive Director and CEO. Next to Paul is John Gosney. John's a company director and consultant with a background in finance and investment. John represents the interests of major shareholder Hugh Green Investments Limited. Matthew Harrison. Matthew was the owner and managing director of EC Credit, the credit management business we acquired in 2012. Matthew has an associated shareholding of 7% in Turners Limited. Michael Dosser. Michael was the chairman of Turners Group New Zealand from 2003 until its takeover by Turners Limited in November 2014. Michael represents the interests of Bartel Holdings, which has a 7% shareholding in Turners Limited. Anthony Vriens. Anthony has been chairman of our insurance subsidiary, DPL Insurance, since 2012. Anthony has consulting experience in insurance and wealth management businesses in New Zealand, Australia and Hong Kong. Anthony is an independent director. Finally, John Roberts. John's recently joined the board, bringing extensive experience in the financial services industry, including Managing Director of Credit Bureau Vader International for 10 years. John is an independent director. Matthew, Michael and John come up for election or re-election at this meeting, and short biographies are included in the explanatory notes to the notice of meeting. I'd also like to mention Kevin Brewer. So Kevin was appointed to the board in late 2012 and elected not to offer himself for re-election at this meeting. On behalf of the board, I'd like to acknowledge the valuable services Kevin has provided over the last 3 years as an independent director and for his additional contribution as chairman of the audit committee. Kevin has seen the business rise from the break-even position at the time of joining to delivery of a record ever profit in 2014 and a doubling of that profit again in 2015, all achieved with clean audit reports and an excellent relationship maintained with our auditors over his term. Kevin, thank you for the full support, sound advice and critical questioning you've provided to Turners Limited and your fellow directors. I'd also like to introduce our senior management team on the screen. It's another sign of the progress we've made that there are now too many people for individual introductions, but I know Paul has very much valued their leadership and support. A number have stepped into new roles or taken on additional responsibilities in the last 6 months or so, and we're confident they'll succeed in their new positions. We have a number of additional Turners management and staff present, and I welcome them here today as well. Also, we have in attendance representatives of the company's auditors, Staples Rodway, our legal advisors Chapman Tripp, tax advisors KPMG, and New Zealand Permanent Trust trustees for the bonds issued last year. Thank you to all of these firms who continue to provide valuable and valued support. I'll now move to the Chairman's address. The Turners Limited business is best described as an integrated financial services group with a prime focus on the automotive sector. The business strategy has evolved but not changed since we recapitalised the Dorchester Pacific business in June 2010. The intention is to continue building an end-to-end financial services business by developing capability and scale across three key areas. Firstly, controlling customer origination to ensure an acceptable transaction margin and also to manage risk. We'll continue building a finance and insurance engine and continue to provide back-end credit management and debt recovery services. Besides being part of this end-to-end business platform, each of our businesses has specific opportunities in their own space, so all must be profitable on a standalone basis. Our growth strategy remains, firstly, drive profit growth through good management and further investment as required in each of our existing businesses. And secondly, we want to grow significantly via accretive merger and acquisition opportunity. Paul will discuss the continued growth from opportunities in the individual businesses and additional integration opportunities at the group level. But here's a quick reminder of where we've come from and the total transformation of the business since the initial recapitalisation in 2010. Over that time, we've completely restructured the legacy finance and insurance businesses, rationalised product, reduced the existing overhead and cost structure, and returned the group to profitability. We've identified potential for growth in the financial services sector, and we've made a number of acquisitions, all immediately earnings per share accretive, growing our finance and insurance businesses, expanding into debt management, and more recently focusing on greater control of customer origination. We've effectively integrated all these acquisitions into an expanding group. The most important thing I can say, though, is we would do every transaction again on the same terms without a moment's hesitation. Our solid organic growth and additional merger and acquisition activity has been translated into improving results and increasing returns for shareholders. Net profit before tax has moved from a loss in 2012 to 19 million in the financial year to March 2015, on the back of revenues up from around 10 million to just under $100 million. Earnings per share have risen from a negative number 4 years ago to 3.8 cents per share for the year to March 2015. Other financial metrics have reflected the transformational change. For instance, financial receivables have increased from just over 20 million in 2012 to over 150 million currently. Over this period, we've continued to set ourselves challenging profit targets up to 2 years out, and we have to date exceeded every guidance and budget target set. The financial year to March 2015 was another very positive year for the company, with both achievement of financial targets and achievement of other key initiatives. We completed the Oxford acquisition by year end and achieved 100% ownership of Turners Group in November 2014. You may recall this time last year I commented on some criticism of our complicated deals. The takeover of Turners, involving a mix of cash, shares and bonds, certainly had some complexity, but we're delighted with the outcome and with trading since. I'm also pleased to note the acquisition of Christchurch-based Southern Finance Limited since balance date for 2 reasons. Firstly, the growth strategy continuing, and secondly, to illustrate that a simple cash up front deal is not actually beyond us when a cash consideration provides the best outcome. We raised $30 million additional capital to partly fund the Turners Group full takeover, which has helped push shareholder funds up to a current level of around $125 million. Following the acquisition of Turners, we changed the listed entity name from Dorchester Pacific to Turners Limited, a reflection of the positive attributes and values the Turners brand brings to the group. Also in the year, we provided an opportunity for shareholders with small and uneconomic holdings to sell their shares, and we've placed those shares and more through an employee share scheme with just under 5 million shares being issued to staff. We've welcomed new directors to the Turners Limited board and strengthened the leadership team with the appointments mentioned earlier in the introduction. Finally, following the 2015 financial year, we declared a final dividend of 0.6 cents per share, taking the total dividend for the year up to 1 cent per share. Turners Limited is in excellent financial shape, with a strong platform now created for additional growth. We've established a credible track record of delivering improving results and achieving the challenging forecasts we've set and continue to set. Our current portfolio of businesses will provide sustainable and growing profits and cash flows. We'll continue to actively pursue further merger and acquisition opportunities that will add to the organic growth of the business. Our balance sheet is still relatively conservatively geared, but we would consider further capital should a larger and compelling opportunity emerge. We have an experienced board and a strong management team with expertise and leadership. Our focus remains on continuing profit growth and increasing value for shareholders. Thank you. I'll now ask Paul Burns to address you.
Thank you, Grant. Ladies and gentlemen, it's always pleasing to report on such an eventful year as the 2015 financial year. The record profit of 19 million before tax included a full year trading from Oxford Finance and 5 months trading from Turners Group, previously Turners Auction. Grant touched on a number of these highlights, but I'm particularly pleased about the overall earnings improvement as reflected in the earnings per share, which were up 61% to 3.28 cents per share, and of course the doubling of the dividend payout to 1 cent a share. Before talking more about each of the operating units, I'd just like to pick up on the concept of the end-to-end financial services group and just illustrate here how we see our current businesses positioned across that financial services spectrum. The finance and insurance operations in the centre there are what we think of as the engine of the business. The Turners Group, with its auctions and fleet operations, is about controlling buying and selling transactions and delivering those finance and insurance cross-selling opportunities. While EC Credit has a major presence in what you might think of as the back end of the spectrum, debt management and recovery. But as long as we don't move back to a cash society, it's a recession-proof business that throws off a lot of cash. Our focus is on growth. The first priority is organic growth in our existing businesses. And as Grant mentions, every one of our businesses is thought of as standalone, and every business we have at the moment is capable and is expected to increase sales and market share in its own space. In addition, we'll actively seek out new businesses that add capability and scale and add additional profit to the group. But we'll continue to remain disciplined with merger and acquisition activities. We've previously mentioned criteria, strategic fit, number one, sustainable earnings, very important, integration risk, and of course value. These criteria will remain relevant for all opportunities, whether those opportunities are bringing us new product or they're bringing us a similar product but in a new channel. It's also a very proactive, it's a deliberate strategy. I'm now spending up to 50% of my time on merger and acquisition activity, and the board are actively involved in the process. The third and increasing opportunity for growth is the integration opportunities that can be realised across the expanding group. And this is not just restricted to back-end operations, such as a common funding model or IT platform, but it extends to the cross-selling of products in the group channels. So for instance, Dorchester Finance is writing some loans for Turners Group customers, where those loans don't fit the MTF criteria. Similarly, DPL Insurance has tailored a motor vehicle breakdown insurance policy for distribution through the Turners Group under the Turners brand. One of our fastest growing metrics, in fact, is staff numbers. Coming into the global financial crisis, we employed around 200 staff. We had business operations over 3 floors in Shortland Street. We had offices, premises in Newmarket, had a business in Wellington. We had a 6-branch network throughout New Zealand. By the 2010 capitalisation and following rationalisation of a number of those businesses, we got down to a staff of 42, all on the 1 floor that we still occupy. We now employ 570 staff approximately, and we should take this opportunity to welcome members to the team from the Turners Group, from Greenwich and from Southern Finance, who have all joined us over the last 12 months. So perhaps we could look now at trading operations in which our people are employed. Turners Group acquisition is more than delivering on our expectations. We've also enjoyed a seamless integration of the business. Trading performance for the Turners Group, previously Turners Auction, has been above forecast, and as you'll see shortly, well ahead of the corresponding period since acquisition. The focus for Turners Group continues to be a move away from wholesale to retail as part of the multi-channel strategy, and that is evolving as was put in place 2 or so years ago. The growth in trucks and machinery has justified the strategy of development of separate sites from the car businesses in the main centres. We purchased a $4 million property in Roscommon Road, Auckland in August last year, and pretty much at the same time we developed a new truck and machinery lease site in Christchurch. We've already outgrown that leased Christchurch site, and we recently announced the purchase of an additional property in Christchurch to accommodate sales growth. We won't be vacating our existing lease site. This new property will be in addition. The Roscommon Road site in Auckland has been constantly full. On the finance side, Turners' finance book has grown over 30% in the last year to be over 41 million now, and we envisage that growth rate continuing. Our growth opportunities for Turners include development of mobile technology to drive business efficiency, development of new retail models online or in partnership with other retail businesses, and the continued cross-selling of finance and insurance products from other businesses in the Turners stable. Turners is a household name. The original parent company, Turners and Growers, as Michael would know, and the spin-off Turners Auction, you can trace the business back to earlier last century, and a lot of very positive attributes as we found when we did some market analysis about the Turners name. So following the full acquisition, we had the Turners brand valued by an independent expert, and that valuation range for the Turners brand was between 45 million and 55 million. So while it might be an intangible goodwill, it's certainly a real asset and does justify the change of name for our group to Turners Limited. We're also more than happy with one of our legacy businesses, one of the core businesses, performance of Deutsche Finance. We've expanded origination channels over the last 12 months. The loan book has increased over 25% to around 50 million. We are currently investing in IT to enhance services for customers and improve approval turnaround times. This development will have application for both Oxford Finance and Southern Finance, which are both on the same lending software platforms. And as part, a good example of the synergies, this project has been driven by the Turners Group, who have a very strong and impressive IT department. Simon, I think we have 14, 15 people in the group. So we've got the capacity that we certainly didn't have ourselves to take on these quite significant projects and have as good expertise as you can find in New Zealand developing systems that are going to assist our businesses in the future. We like the balance of consumer and commercial lending in the Dorchester Finance book. It already has a higher mix of commercial non-motor vehicle loans than the others, and we'd like to build the Dorchester Finance capability as a credible lender to the SME customers. All the things we liked about Oxford Finance business a year ago, we still like. Great business, great staff. The loan book's is more motor vehicle centric than the Dorchester Finance business. But we still managed to increase that book by 15% over the last 12 months. Again, the business has been successfully integrated into the Turners Limited Group. Profit performance has tracked ahead of the pre-acquisition forecast, and the percentage profit growth has more than matched the percentage growth in receivables. So besides building the book, we're getting more efficient and achieving a better return out of the business. There are further growth opportunities from expanding the number of dealers and brokers in the existing geographical regions serviced. And as I mentioned, the IT investment in Dorchester Finance will create further efficiencies for Oxford Finance. DPL Insurance continues to grow. It's a slower growth, just the nature of the business. And we noted in earlier commentary on our profit release to March 2015, we had a one-off reserving impact, about 400,000, 500,000, as a result of the lower 10-year interest discount rate. And if 10-year interest swap rates continue or move down further, there may be some additional reserving required. However, these positions will unwind as we eventually move to a higher interest rate environment. And more importantly, our claims ratio is, across all the products for the last year and since, remains satisfactory. The strong growth in policy sales has continued, particularly across the suite of motor vehicle insurance products, as the mainstream brand and awareness of that brand and distribution channels for that brand have increased. We have in recent months also white-labelled versions of our existing mainstream motor vehicle insurance policy for key distribution partners. So I mentioned Turners, but there is another product that you might purchase in the market under another brand, and in fact we're the underwriters for that brand. The acquisition of Greenwich Life insurance business, while modest in terms of profit contribution, has provided greater links and product distribution for the intermediated advisor market. And we're currently in discussions for a very similar transaction with another smaller insurer. The results of EC Credit, our credit management debt collection business, were also impacted last year by the stronger New Zealand dollar over the year to 31st of March 2015. This hasn't had any impact on our strategy and growth plans for the Australian business. The Australian business generates about 50% of our revenues, It is profitable, it remains profitable even at parity, and we're pretty happy with the trending of the Kiwi against the Aussie in recent times. So that will provide, and is providing already, a higher Australian profit contribution for this financial year, and even if the exchange rates stop at where they are now. We've also, in EC Credit, seen the benefit from a restructure of the Australian sales force earlier in the year. So growth opportunities for EC Credit include building the Australian corporate customer base to boost contingency collection in Australia from larger institutional and bank clients. And the other opportunity is improving debt load from SME businesses, both in New Zealand and Australia. The EC Credit business, it's a significant business, employ 148 staff across Australia and New Zealand. And as we've said, it's a fantastic business for cash generation. Just going back to our end-to-end slide, and I won't dwell on this, it all starts to get a little bit complicated, but we've mentioned opportunities and mentioned the priority of organic growth, and those are represented in blue, where we think that there are opportunities for our existing businesses to grow. But in addition, there are integration and cross-selling opportunities, which we've put in green for most of our businesses. And the overlay, very important part of our growth strategy, is merger and acquisition opportunities, which continue to be actively pursued. This is a great graph. So this could be a quadrant. Anything outside that quadrant, you're either below forecast or you're below last year. And it's nice to report that all our businesses are trading ahead of forecast, i.e. budget, and ahead of last year. The motor vehicle finance market remains very competitive, with banks and some newer second-tier finance companies chasing new lending targets and market share, and some relaxing of credit and lending policies for them to achieve that. And as we've said before, we're not chasing market share, we want to build quality receivables books. Consequently, we're pleased with the year-to-date performance of Deutsche Finance and Oxford Finance. As you see there, trading comfortably ahead of forecast. And Deutsche Finance, going pretty well against last year as well. EC Credit's tracking ahead of budget and last year for the first 5 months with higher sales. That's number one. And secondly, the more favourable exchange rate. Turners Group has recorded some outstanding months since April. The last 2 months have just been fantastic results. Car auction and sales volumes holding up, and the high truck and machinery sales contributing to overall higher sales activity. So trading performance is around 40% ahead of the corresponding pre-acquisition period. Just moving to more recent events, in late July we announced the acquisition of the Christchurch-based Southern Finance Limited, an established finance company in the used vehicle finance market with loans originating through motor vehicle dealers, finance brokers and strategic partnerships. This acquisition provides an ideal base for us to increase our market share in the South Island. We'll continue to operate the business under Southern Finance and from our existing premises. We expect the business to contribute around $750,000 in the first year. We'd like to think that will increase to $1 million or so thereafter. The purchase price was $5 million, as we have advised. There were net assets of approximately $3.3 million and the balance of goodwill of $1.7 million. Early days, but high calibre, committed staff, and we can support those staff and we can support the growth that we believe is great opportunity for us in the South Island. Motor trade finances. Earlier this week we announced we would be making an offer through Turners Finance to take our shareholding possibly up to under 20%. But as noted in our company announcement, the MTF constitution contains restrictions on any shareholder in MTF holding more than 10% on issue without board or shareholder approval. Turners Finance at the moment, with its increase in the growth of its finance book, currently writes around 10% of the new loans originated through MTF. And this percentage has been increasing in recent months, and we expect our book and our growth to continue. We feel there is value in increasing our shareholding to a more meaningful stake than our current 0.9%. And we'd like to think that our expertise and experience in the wider financial services and insurance industries could bring value to the business for the benefit of all MTF shareholders. And we've already discussed some of these initiatives with MTF. This is not a takeover offer, and we're relaxed about the final shareholding we end up with. In the meantime, the dividend yield based on the current MTF profit, which we don't expect to drop, and their dividend payout, the dividend yield is around 9% after tax on our $1.15 offer. So the investment, to the extent that the business continues to perform well, is self-funding. The Southern Finance acquisition and the MTF initiative clearly won't have much of an impact on our profit for this first half to 30th of September. We expect to report a profit before tax of around 9.5 million for the 6 months, and that would represent about a 70% increase on our last year's interim. For the full year, we expect to at least achieve, but will likely exceed the guidance trading profit before tax of 20 million on the basis of current trading and recent merger and acquisition activities. However, with still got 7 months trading to come, with potential for some aspects of the local economy to slow down, it's too early to reforecast this current guidance. We're very positive, but we would prefer to over-deliver. And shareholders can be assumed that whatever profit we end up with this year is definitely not the level that we're aspiring to. We'll continue both organic growth and additional growth through merger and acquisition activity through this year and over following financial years. Just finally, and most importantly, could I thank all our staff across the businesses, existing and new staff, for their hard work and dedication in delivering and continuing to deliver such a great result for Turners. Thank you.
Thanks, Paul. If we could now deal with the annual report. The report incorporating the financial statements and auditor's report has been made available and posted to shareholders who requested a hard copy. We will take the 2015 annual report as read. We can take questions now on the report or on our addresses following consideration of the resolutions, unless any shareholder wishes to deal with any specific matter now. Questions? Hi.
Yes, I noticed recently, and I think it's comments emanating from Heartlands Bank, they were talking about a proliferation of newcomers into the finance sector. Now, I'm not sure exactly which aspects of the finance sector, because there's quite a few varieties. I mean, their specialty seems to be harmony with trade me in the peer-to-peer lending. Are you fairly well isolated from these newcomers with your different activities? Would you comment on whether you've seen any of who these newcomers are, with the sort of area of finance that they're in?
Well, I think we haven't seen a lot of newcomers per se, but existing businesses like Heartland have sort of moved into the tier 2 finance space, which is where we specialise. You have banks lending in this area where they might not have done so before. So, there is more competition for sure. I don't know if it's from new companies, but I think Paul mentioned before, our focus is on, well, firstly, controlling the origination of deals. So like business that comes out of Turners, we don't sell anyone else's finance product there. So that's why we're keen on controlling the origination. And we don't get into competition on rate or do a deal that we think is wrong just to grow our book. So, and we have been growing despite attention from other people. I don't know if you'd want to comment on that anymore, Paul. But no. Okay.
Mr. Chairman, in the annual report, I have to congratulate the company because the operating cash flow looks as though it's gone from about 2 to 10 million. That's fabulous. But at the same time, there's a much lower increase in equity than there is in total assets. So it means that you're actually increasing debt all the time, and you would with a finance company, I understand that. But what are the controls on this massive debt that you're going? The reason I ask is I'm very much reminded of Equity Corp, which had the same sort of ability to take companies over, and it increased radically over a short period. And then, of course, we know what happened. Suddenly the asset prices fell and no history. How do you control that?
Well, for a start, our equity is about 36%. So we do have, especially for a finance-oriented business, very strong equity. Because if you look at, what happened in the finance sector a few years ago, a lot of those companies had 5 or 10% equity, and we've got 36. Also, in our finance book, most of that borrowing that we've got actually relates to the finance book rather than acquisitions. So most of the acquisitions, we've had a strong proportion of capital funding those as opposed to being all debt. In terms of controls, obviously, as a board, we consider it. Our bankers consider it if there's debt involved, and I would say our bank's been very, very supportive, and they run a very watchful eye over all those things. So, once again, I don't know if you want to add anything to that, Paul, but you did mention we're a finance company, so
Yeah.
Finances or borrowings are our inventory, which we resell to someone else. So, as our finance books get bigger, our borrowings get bigger.
Perhaps just to answer a point on the rationale for our acquisitions. So you go back to those takeover days, they really weren't interested in what the sustainable earnings of those businesses that they acquired. It was all a matter of a roll-up. We are very focused on what the businesses that we acquire can generate in sustained earnings and earnings that we can further grow. So there is a core profitability that we're looking at in any acquisition before we'll shell out any of our hard-earned money. Hope that helps.
Thanks.
Right, any other questions for the moment? Okay. We'll now move on to the 7 resolutions to be considered. We'll not seek seconders to the resolutions, but would invite discussion on each. The first resolution is the reappointment of Staples Rodway as auditors. I move that Staples Rodway be reappointed as auditors of the company and that the directors be authorised to fix the auditor's remuneration. Is there any discussion on this point? I should mention, just if anyone wants to ask a question, could you please just give your name so we can respond properly? Okay, the poll on the reappointment of Staples Rodway and on the other resolutions will be conducted at the end of the meeting. Resolution 2 is the re-election of Matthew Harrison as a director. Matthew, would you just like to say? a couple of words supporting your re-election. Thank you.
Thank you very much. I very quickly wrote a few words out here. So, my name's Matthew Harrison. As has been mentioned earlier, I used to own and operate EC Credit Control before I sold the business to what was Dorchester back in September 2012. The last 2.5, 3 years has been very exciting, being part of the board, and I've certainly enjoyed it a lot. As the old owner of EC Credit Control, I have obviously a very good knowledge of the credit management sort of industry in Australia and New Zealand, and I think I can add quite a lot to the board table with regards to that. Also been involved, I guess, with the growth of EC Credit. When I joined that business, we had 10 staff. As you know, today we have 150 staff in EC Credit, so I think I do have some, some sort of abilities to help businesses grow, certainly the businesses that we have with Turners, and we are obviously looking for growth as well as mergers and acquisitions. So I think I certainly bring something to the table with that regard as well. As a reasonably significant shareholder in Turners, as Grant mentioned earlier, I have about 7% shareholding, and some family members have some other shareholdings as well. I'm obviously very determined to maximise the returns out of Turners for the shareholders as a group, and obviously myself as well. The goals that I have as a member of the board, I think, are very much aligned with every shareholder in the room, and seeing that we want to maximise the value of this investment. I have quite a big passion, I think, for Turners. I'm sure the other board members would agree. I throw a few ideas around. Not all of them are always the best ideas, but we certainly throw them around and try and put them in place. So I've enjoyed the last 3 years on the board, and certainly look forward to another term as long as the shareholders will have me. Thank you.
Thanks, Matt. I now move that Mr Harrison be re-elected as a director of the company. Is there any discussion? Resolution 3 is the election of Michael Dosser as a director. Michael, would you like to say a few words, please?
Thank you, Grant. About just over 30 years ago, I was seconded from my position in the Turners and Growers Group to be the acting CEO of Turners Auctions. And that lasted for a period of 8 months while we were in search of a new chief executive. We finally got a new chief executive, and after that we floated the company off on the stock exchange. It had been just a division of the parent company, and it grew from strength to strength from that period on. When the shareholding changed with being floated on the stock exchange, we had a number of different shareholders, and it wasn't too long before we had Paul Byrne talking to me about saying, I think I might like to be a shareholder on this company, and he was negotiating to buy the Milford Asset shares that they owned, and he bought that parcel of shares. I, as the chairman of the company, invited him to come along and join the board. He did, and it was a matter of weeks or maybe days, Paul, when he said, this company's got somewhere to go, but the real future is having the two companies together, and he had interest in taking Turners over. And this was the vision of Grant and Paul. That was put to me representing the Bartel shareholding, which was the biggest shareholding in Turners Car Auctions. And we finally, after negotiations, bought into that, and the Bartel interest, or on their behalf, I signed a lock-up agreement with Paul, which was effectively the issue that guaranteed this takeover was a success. So we've bought into that concept, and we bought into it because we bought into the vision that Grant, which he's talked about today with the way they're growing this company, and Paul had for the future of 1 and 1 making more than 2. And you've heard the results today. That certainly happened. So I've had a long experience in the business. I've been part of this takeover, which has proved to be a success. And I'm going to repeat what Paul said. It was the smoothest takeover I've been involved in my business career. I see an exciting future with the company, and I want to be part of it. So that's why I seek shareholder support. Thank you.
Thanks, Michael. I move that Mr Dosser be elected as a director of the company. Is there any discussion? Thank you. Resolution 4 is the election of Anthony Vriens as director. Anthony, it's your turn.
Thank you, Grant. Good morning, everybody. It has been my privilege since September 2012 to be chairman of the Dorchester Insurance Board. At that time, I was invited by Paul and Grant to join the company on that basis. My background, particularly over the last 10 years, has been in insurance, general management and executive roles for companies such as Suncorp and Tower in New Zealand. On all aspects of insurance. Dorchester was a unique opportunity in that it was originated for both life and general insurance, which is unusual in companies at the moment, and the opportunity to actually be part of an organisation that was committed to growth and also to, making a whole new offer to New Zealand public in a special place was an exciting opportunity. I think over the last 3 years the business has performed admirably. I was delighted also to be invited in January of this year to join the main board. So really I bring a lot of insurance expertise. I currently have roles outside of Dorchester, both in Australia and in Hong Kong. My commitment to the company is I fly back from Hong Kong every month to the board meetings. And I'm looking for, shareholder support to continue in this role. I think I do bring a very strong risk and compliance aspect to the role. I often have interesting discussions with Matt about his interesting ideas. And it is good to actually look at the business in a very holistic sense. My background, as some of you may know if you've Googled me, is I am a medical doctor, and as this board gets older, I am looking at their knees quite strongly. So hopefully I have your support in re-election. Thank you.
Thanks, Anthony. I move that Mr. Vriens be elected as a director of the company. Is there any discussion? Oh, thanks. Resolution 5 is the election of John Roberts as a director. So, John, would you like to address the shareholders, please?
Thank you, Grant. Good morning, everybody. I'm the newbie, so I'm the most recent appointment to the board. A very quick snapshot of my background. For the last 10 years, I've been managing director for a company called Vida International. Some of you shareholders may remember Vida emerged out of the Baycorp company. So it was in a very similar space to EC Credit. I was part of the consortium that privatised Vida back in 2007 with Pacific Equity Partners, Australian private equity investors. Their brief to me was take the technology that had been developed in New Zealand for credit reporting, credit ratings, and go be an evangelist up in Asia and the Middle East and try and do some JVs for us. So that was really my brief, and we did that. We built businesses in Singapore, Malaysia, Cambodia, Indonesia, Sri Lanka, Myanmar, Saudi Arabia, Dubai, and a few other sort of outposts. We successfully relisted the company back in December 2013 on the ASX. And I advised the board at that stage that when I came out of my escrow with my stock, which was August of this year, I would be retiring. Because I said after 10 years of being CEO, it's time for me to do something different and time for the business to have a new lens put on it as well. That's when I was approached by Grant and Paul when they heard that I was leaving to see whether I might be interested in joining the Turners board, which I very happily accepted because it's right in my space. I've been dealing with credit and risk and major customers such as the major banks really for about the last decade. Prior to that, I was in the communication business. I was with a brand called Saatchi & Saatchi for many years, and I was their CEO in Auckland, and I was then their managing director and regional director in Asia Pacific based in Singapore for 6 years. So I had a very strong background in the whole communication and brand building. So I'm thrilled to be on the board. I really hope that I do get re-elected. I think I've got a lot of value add to bring to the table, both in terms of the whole credit and risk space, the relationships with the major financial providers in New Zealand and Australia, and also on the whole sort of customer, the CRM customer relationship platform as well from my brand days. Thank you.
Thanks, John. I move that John Roberts be elected as a director of the company. Is there any discussion? Thank you. Resolution 6 is to authorise an increase in directors' fees in aggregate from $375,000 per annum to $440,000 per annum. Aggregate directors' fees were last increased in 2013. I move that Resolution 6 is now on the screen and included in the notice of meeting as put. Is there any discussion? All right, thank you. Resolution 7. Resolution 7 is a special resolution to approve alterations to the Constitution of Turners Limited. The company's constitution was adopted in 2004, and the alterations as detailed in the explanatory notes will make the constitution consistent with current New Zealand legislation. I move that the alterations to the Constitution of Turners Limited, as detailed in the explanatory notes on Resolution 7, accompanying the notice of meeting, be approved. Is there any discussion? Thank you. Well, that concludes the formal agenda. Are there any further questions from shareholders on the annual report or any of the presentations today?
I'm Michael Connor, a shareholder. I notice in the notes of the accounts that we still have tax losses being used up, but I also notice there's imputation credits building up in your imputation account. Are we likely to get imputation credits on the dividends soon, or is that going to stay unimputed for a while?
Look, I will definitely refer that to Paul, being one of the accountants in the room.
As you're probably aware, the businesses that were existing at the time the tax losses were created are able to use those tax losses. Businesses that we've acquired since we're paying tax on. And that gathers imputation credits. We've also got, if you have a further dive in those notes, some prepaid tax. And you are able to, with the blessing of the Inland Revenue Department and the advice from KPMG Tax, we're able to get those, we basically can cash in our imputation credits and get cash back for those to the extent of the prepaid tax. So the imputation credits that were there at the 31st of March, we've cashed in. And I think, where's Barbara? I think we're pretty well run out of prepaid tax. So tax now that's paid will create further imputation credits that will be applied to imputation of those dividends. So for this financial year, 31st of March 2016, there will be a part imputation credit and likely to go to full imputation credits for the year ending 31st of March 2017.
Thanks, Paul.
Bob Powers, shareholder. Are there any plans for real estate consolidation with the growth of the company and multiple offices throughout the country to consolidate in one site?
Not really, no, because a lot of these businesses are, for instance, Oxford Finance is in a different place than Southern Finance and so on. So look, where that's an opportunity, we will definitely look at it, but that hasn't really presented itself so far.
Yeah, as you acquire more businesses, there seems to be more and more names in the portfolio of Turners, and I'm just wondering at some point whether it would be best to rebrand these businesses under the Turners name and raise the profile of Turners as a company, you know, a kind of consolidation.
Well, I mean, that's another thing we haven't talked about too much, but we do actually like having separate businesses in a lot of cases. If you look at somewhere like Southern Finance, South Islanders like dealing with South Islanders, not people from Auckland, definitely. So it's, and you know, if you look at Levin and other places outside of Auckland, it's nice to have a kind of locally branded company. So you know, potentially there's opportunity to do that in the future, but there's no current plans to do that. Any other questions? Right, thanks very much. If there's no further discussion, I'd ask shareholders to vote on the 7 resolutions that have been considered. So voting papers need to be completed by ticking for, against or abstain against each resolution. Please do not tick the proxy discretion box. The voting papers will be collected in the boxes provided, and Staples Rodway, our auditors, will oversee the voting. The poll results will be released to the NZX as soon as practical following results of the voting being confirmed by Staples Rodway. I'd like to thank everyone for their attendance today and declare the meeting closed. You're welcome to join us for refreshments. Thank you.